Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Friday, April the 22nd, TGIF. My name is Doug McKay, and each morning we come together in these live go-to sessions to take a look at the market macro to micro, the structure of the market, and then we drill down to where our trade levels are going to be, what our targets are going to be, and what our main hypotheses are. This is a subscription room, so if you want to come in and check us out, I'll put up my contact information in just 1 second. Please, before we do that, read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and the trades that see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. If you want to get a hold of me and join the room, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. We do everything live here in the go-to. We do these live sessions in the morning. Then I do live trading and analysis. You will need a Skype account. You can send me a contact request at Doug_McKay. It's easy to do, it's quick to do, and we use the Skype chat in addition to the go-to for the audio and the video. If you like this video and you want to check out more videos, there's over a year and a half, I don't know, 2 years, I know it's over 300 days up on YouTube of these pre-market sessions, so you can see what we do every morning and do the same routine, and then what our success rate is from those hypotheses. And if you like what I do, please follow me on Twitter at Crazy2. Okay, yesterday our main hypothesis was a continuation pattern, and I was expecting to open, come down into the 85, 86 area, possibly the 89, 91 area, and then bounce from there and move up through into the 2100s. That was my main hypothesis. Our secondary hypothesis was to go up, fail between 2100 and 2105, and then fall back in and come down through into the 85, possibly down into this 80-50 target. And then our third hypothesis was chop, sideways movement, and then a drift down, and basically hypo 3 is what really played out. And we closed the day on the lows. Last night we went down and put in a newer low. Now I want to point something out to you, because this happened last night, and it's always a fantastic trading opportunity. I pointed these out to you guys before. You can see that let me put this on to a 5-minute here. Between the ETH session, the extended trading hours that runs from 4:30 Eastern to 5 o'clock, we had this move up, and we closed back the ETH session. We closed back near the close of basically one tick below the close of the RTH session. And then in the Globex at 6 p.m. Eastern time, we opened up at 79.75. This created a technical gap, a Globex gap, where you've got this range gap between the high of this bar at 80.75 and the low or the close of this bar. The open of the bar, but more importantly, what the close was. So we had this huge gap. These gaps are not left very rarely. We did a study. I had a guy to do a study a couple weeks ago on them. It's 98% probability. I think it's even 98.9%. Guy from Stage 5 did the session for me, that these gaps are closed. So you have a huge opportunity here to find a trade based on your own trade setups to get long into that 82.50. And I actually, I went large on this and actually made my night, just on this one hypothesis or probability of taking and closing that gap at 82.50. So just keep an eye on those if you're going to trade the Globex. I mean, it's really one of the best trade setups in terms of the early part of the Globex session. I mean, the early part of the Globex session is always very quiet. You have to have a lot of patience and allow the trade to take a long time to develop. And it, sometimes you can be sitting in a trade for hours before it actually works. But you just have to have the patience and have something to occupy your mind while you're doing that. Okay, so let's first take a look at the news. This news out this morning at 8:30 is we had core CPI, core retail sales, and CPI month over month for Canada. They were a beat, so the only Canadian news this morning. The U.S. news is coming out 15 minutes after the RTH Open at 9:45 Eastern, and that's the flash manufacturing PMI. And other than that, we don't really have any other scheduled news this morning. Microsoft and Google and a bunch of others put out their earnings last night, and it was basically a miss on most of them. So that could affect our open this morning when the market on open orders. So be careful this morning. I think it's going to be very jerky. I always like to start my day doing a basic look at the trends and the different time frames. I use a simple candlestick chart with a 9 EMA and a 20 SMA. What I'm looking for is I'm looking for slope and separation, strength of the trend, where the trend is being violated, or challenged. And you can see on the monthly, we have a beautiful trend over the last several years. Then in August and September, they violated the trend. October, November, they took it back. And then December, we came back and challenged. And then in January and February, they violated the trend. And then March and April, they've taken the trend back with the possibility of continuation. Going to the weekly, we've had this parabolic move on the weekly. What do we got? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 weeks of trend going up. We've got price paralleling the 9 quite nicely. A little bit of a technical gap here, a gap close on the weekly. Going to take us down into the 2034, 2038 area. There is a naked cross down here at 1983, so at some point in time we're going to come down and challenge. This is just how high will we go before we get the pullback. But the trend itself is still intact on the weekly. On the daily, you can see that we've had very strong trend, good slope and separation. Then they came back and they challenged it and violated it, and then they took it back, and we've got our continuation pattern happening. Got good slope, got good separation. We're holding the 9 EMA. We are challenging it this morning. This is a level that I'd be watching. It's 78.75, but I'm really going to be watching the 77.75 overnight low. If we violate that, a move down into that 75 and possibly even into that gap zone between 64 and 58.50. But we'll look at that on the structure chart. But the trend itself on the daily is still intact, but is being challenged right now. On the 4-hour, we had this strong upward trend, and then we rolled over, and now we've starting to get slope and separation to the downside with a naked cross above us, up at 2092 and a quarter. But right now we're below the 9 and the 20. So in the Globex, the trend is been down overall. Going to the 1 hour, a strong downward trend in the RTH and into the Globex. They come back, try to take it back, and so far they're failing, and looks like we could get a continuation pattern down on the 1 hour. Going to the 30-minute, You can see strong move down during the RTH and Globex, and found that bottom at 77.75, and then we've come back and we basically were in consolidation and chop on the 30-minute. On the 15-minute, same thing as the 30-minute. We are below on both the 15 and the 30-minute right now, so the probability is to the downside. And then last but not least, the 5-minute, you can see we've got slope and separation. They've come up into the 20 and failed off at the 20, and we're currently below the 9 right now with slope and separation to the downside. So the trend coming into the RTH session is down. I expect this trend to continue into the open of the RTH and then the market on open orders as people adjust their positions from the earnings news. So taking a look at the structure, the big picture, again, we've got some new people in the room, so I'm going to just put things into context for them. So end of last year, from October the 7th through to the end of December, we are in this balance zone right here. And this is an RTH day session, meaning this is only calculating the 405 minutes of the RTH session that runs from 9:30 Eastern to 4:15 Eastern. And we created this value area between 86.50 and 08 with this upper Gaussian distribution, this beautiful bell curve on the upper distribution with a key CLVN at 2016, and then the lower distribution down here. And the most traded price in all of this time frame is up here at 2063.50. Also, this black profile is my composite profile that goes all the way back to the beginning of 2013. This line right here at 61.50 is the most traded price going back to the beginning of 2013. So once we fell out of value, we tried to hold value in the first few days of January in around the 78, 79 area. They couldn't hold, they gapped down, and then we came down into this lower distribution down here, created another microcomposite and balance area with the value area from 1855 to 1930, and then we broke out, started finding value and holding it, came back up to the value that we found after falling out, where we tried to hold after falling out of this balance. We accepted that value, we gapped up, challenged the value area low, broke through the key CLVN, and then we started working our way up the distribution up into the microcomposite VPOC at 56, 57 area, and we kind of chopped around in this area, found value in around this 2040, this whole period inside of here. The microcomposite VPOC, or the most traded price, was 2040.50. Then we came up, accepted value a little bit higher, and then we gapped up and challenged the microcomposite VPOC from this upper distribution up here in the microcomposite, accepted that value, accepted the 75, and then we broke through the 86.50 and went up and put in a new all-time high, adjusted high. Our all-time adjusted high was 2100. We've now put in a new all-time adjusted high at 2105.25. We do have what I call an unequalized high up at 2134, which is the actual all-time high in a previous contract. But with the adjustment, that brought it down to 2100. So technically, we have had an all-time high put in. Now, in the past and through history, the difference between contracts, the 2134 and the 2105 0525 is generally equalized, meaning they're likely to go up and put in a high and test that 2134. It doesn't necessarily have to happen right away, but generally over a period of time, that is the statistical probability. Now, yesterday we started falling out of this balance around the 94 area and coming back inside of the breakout day body. And we are auctioning lower and not holding above that microcomposite value area high at the 86.75. You can see they battled that area and created a new CHVN, composite high volume node, at that 86.75, just one tick above this 86.50. So 86.50 is really going to be our over-under line today. Our key line in the sand. Above the 86.50, I'm looking for a move back up into the 90s and back up into this 94, 93, 94 area. If I bring yesterday's, I don't have yesterday's yesterday's volume in the two-day microcomposite because of the fact that we closed below the range low of the two-day balance. And same thing why this candle, the breakout candle, is not in here. But the most traded price in the last 7 days, if I draw a profile, okay, now that we've balanced and we've closed inside of the breakout candle, the microcomposite VPOC is still down here at 75.75. So if we hold below the 86 and below this 84 and a quarter, or more importantly below the range low of yesterday at 82, we closed on the low yesterday. Our VPOC from yesterday was stolen into the close, and it shifted down to, did it shift down? I think it shifted down to 80. Sorry, I just want to make sure I got this right. Yeah, it shifted down to the 85.75. So we closed on the lows. They've explored it, lower down to 77.75. If we, hold below this area, I'd be looking for a rotation down towards the 75.75, possibly even coming down into testing this gap zone. If I bring up my flex level chart, let me do that. All my charts are in the way here. You can see that we have this gap zone down here with this naked VPOC and this naked close, and then another naked close and naked VPOC down here in the 56.55 area. So if we're coming down to find more buyers to take us for another move up, the 75.75 is the key target, and possible extension down to test the top of the gap zone or into the gap zone. But we got to take each level one level at a time. So right now there's not a lot holding us up here if we can't get above this 84, and more importantly above the 86.50. So we've got this low volume node down here, between the 82 and the 75.75. We could come down and start filling this microcomposite low volume area in as one of my hypotheses, with a push down to 75.75 to find responsive buyers down here. Above 84, look from the push up into the 85.75 microcomposite VPOC from yesterday and into the 86.50, 86.75. And then if we can get above there, there's this LVN right here at 80 microcomposite LVN at 88.75. We can get above there. The next price acceptance is up here at the 87 area. and then the, I'm sorry, next price acceptance is up here in the 93, 94 area. So that's the big picture. Let's take a look at the overnight session and start moving our numbers over to our trade chart. So the overnight high is up at 89. Overnight low is down at 77.75. Our overnight VPOC shouldn't shift, but we still have another 20 minutes. 85, just below our thing. Very balanced overnight volume again. Overnight inventory is neutral to net short, but no double distribution, no clear LVNs in the Globex session. Very strong Gaussian distribution with price being accepted back in this 85 area. Okay, I don't need this now, so we can get rid of that. Expand this out. So yesterday's value area was at 82.75. The low was 82. That's obviously going to be our key trade level for this morning. Above that 82.75, I want to be long into the overnight VPOC at 85 and the takeout of the naked VPOC at 85.75 from yesterday. We did have a double distribution day yesterday. It was actually a bit of a triple distribution. The LVN that you want to pay attention to is this 87.75, and we've got to incorporate that 86.50, 86.75 area. So I really don't want to be, if I'm looking for a continuation trade or trying to get into a trade to the long side, I want to be above the 87.75, but I want to be below the 86.50 if I'm looking to get short back into this 85 area and the lower distribution. Above there, you've got the overnight high at 89 as a target, and then your next resistance is going to be up here at the midpoint at 90.25. Above 90.25, looking for 80% destination trade back into the 92, 93 area. And I'm really going to incorporate that 94 as well. So from the bottom of the trade zone at the value area high, I don't want to take continuation until I'm above this 94. So just, I can't expand this any, well, I could probably just put a double one here so it incorporates that 94 as well. And then the first target above there is the 95, yeah, it's going to be 95 even. I thought it was 95.50. And then at this point in time, I'd be looking for a push back to take out the high at the 98.50 and test the 2100. Our 20-day ATR for the full session is running 22.01. So off of the bottom of the night at 77.75, our daily upside target is 20.99.75 to 2100. Obviously, this is going to be a trade area for us. I'm actually going to use the 2175 because that's the LVN, the CLVN, I should say. So I want to make sure that we're through that. And then the targets above are 0250, the all-time adjusted high at 05.25, and then we have measured moves at 750, 1075, 1350. There's a new one at 2116.50, and then 2126.25. Our weekly ATR is still up here at 2130. It is Friday. We've had a pretty tight range this month. Our downside ATR target 21 off of 2105.75. Our weekly ATR is 71,675. So the downside is all the way down at the 2034. So not really feasible that we're going to come down today. So what we have to look for is where critical mass kicks in. And we basically hit critical mass. Critical mass is way below us. So we could see a lot of chop on the open, then the sellers step aside based on critical mass and a drift into the Friday afternoon close. But I am expecting an initial push down. So my main hypothesis is chop around the open, possibly come up into the 85, fail, break through the low from the prior day and come down and take out this overnight low with the main target below being 75.75. So chop, failure between here and 05, and then a move down, taking out the overnight low and a target at 75, possibly continuation if we get some real weakness down into the 67, 64 area. This is not the composite VPOC. I don't know why that is there. That should be at 6150. But that's my main hypothesis. My secondary hypothesis is chop on the open, push down through to the 75, maybe even the 69.75, chop, and then push up back in through the value and chop around and drift higher into the overnight high, into the 89.75, possibly 92 area into the close. That's hypothesis number 2. Hypothesis 3 is chop around inside of the low from the prior day and basically come down and just simply chop and go sideways into the close between 75 and 82.75. So those are my 3 main hypotheses. Trade what you see, not what you think, but we've got to know based on our trade levels how we're going to trade it, what the possible wave pattern can be. Currently taking a look at the Keltner, our 24-hour value area, or VPOC I should say, VPOC. Our 24-hour VWAP, value weighted average price, is at 84. Our Keltner center line is at 84.25. Our VPOC is at 85. We're currently trading below it. A trip down to test the lower Keltner will take us down into that 78, most likely take out the overnight low at 77.75. If we get above the Keltner center line and above the VPOC, a move up into the upper Keltner line is going to take us up into that 2090 and take out the overnight high. Just take a quick look at Bookmap. You can see that right now our liquidity is between 81 and 79 below us, and then we've got zebra stripes up here and liquidity up at 84 and through to about 86. But this could change dramatically on the RTH Open. We're just currently creating a zipper zone right here in around the overnight low at the 82, and you can see that this zipper area is pretty pronounced. I closed this down and opened it. It was pretty pronounced overnight as well in the early trading session. So just be careful in the open. Remember, we got news coming out 15 minutes before close. Last but not least, let's just take a quick look at gold. As I mentioned yesterday, the composite VPOC going all the way back to 2008, October the 24th, 2008, shifted from the 1204 area up into the 1235 area. We tried to break out and continue the upside pattern. They failed as anticipated. I said we're likely going to get a move back down to this 2035 30. That's still my main hypothesis. You can see that the overall microcomposite that we're trading in right now, the VPOC is down at that level. We've got a double distribution going on. The microcomposite LVN, we've just broken below it. So right now the immediate target is the 2040-30 level, but the main target for the day is down here at 2035-30. If we get back above the 2048, 2050 area, and we get into this upper distribution, the target above is back up at that 1254, 1255 area. So that's what I'm looking at right now, gang. That's going to complete our pre-market session. I know I went a little long, but we got a couple new members. Just want to make sure they understand the context of what we're looking for. As always, trade well, trade safe, and we'll catch you on the flip side.